GM, we just got a big release of economic data. So, how is that going to affect Bitcoin today? Let's dive into it, starting with the weekly charts and zooming in. So, firstly, 50-week EMA, that's been lost. We all know that. 100-week EMA has been an area that I've been interested in for some time now. We haven't seen that proper forced selling capitulation, which I think can find support around that general area, especially because it's in this demand zone. But if we remain patient, that's going to give us our best opportunities because during this down move right here, you've just got a lot of people who are coping or buying the dip, and it keeps dipping or adding margin to their underwater positions. And that's why you typically see all of these down moves finish with some capitulation wick and a high volume day. Shared many examples in yesterday and the day before's morning market video. But, to really call this a bottom, you just need to see a candle like this, where you have a wick lower, fails to go lower, so that shows sellers are exhausted. They can't push price lower. Ends up closing green with high volume, with a big reversal candle on the weekly time frame. This also confluenced, of course, with the 50-week EMA and a retest of this SR level. So loads of confluences. They give you your A-star setups, as I call them. That shows you that bottom's likely to be in. And we haven't seen that. It's still red candles all the way. There's not this big wick where we've printed this nice green reversal candle. And that's not going to work 100% of the time, but it's at least going to work more often than trying to get long on swing longs when it's just red, 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 and red. And there's no big capitulation, no high volume. And your high risk reward areas are around those areas with multiple confluences, like the 100-week EMA, this demand zone here, which is why that's an area I'm looking to bid. In the Discord, I gave you guys my high time frame portfolio update. Of course, sold all my Bitcoin at 121k on August 11th. Now looking to buy some back and have started to set some of those orders now. So keep you guys updated on every move I make with the high time frame portfolio. So that's Bitcoin on the weekly chart. It's still going down. Can this bounce? Yes, of course. There can always be bounces, always can be squeezes, but is there the signs of a high probability bottom right now or local bottom? Not yet. Not seen that big reversal week. Even this, what is this? It's a green week, big reversal on that capitulation. See it time and time again. This is red, but it's still a big wick, and you had so many confluences because of the bearish news failing to push price lower. So that's what I'm waiting for on the weekly. Now, if we zoom in to the markets, let's go into Bitcoin here. Well, the 4-hour 12 and 21 EMA trend has been that respected trend in this downtrend. You can see wick into it, push lower, wick into it, push lower, wick into it, push lower. Playing out really well. Sellers are slowing down a little bit here, but this is a consolidation within a downtrend. So trend is your friend and bias is for lower. Sellers are still in control unless we can reclaim the yearly open. Get above the yearly open, and now we can talk about squeezes. Break below 90k, and now we're talking about a breakdown. And I think in between those levels, expect chop. Expect sideways, expect consolidation when you get your range in price action, because that's what price does in trends. It marks down, consolidates, chops, marks down. And a lot of traders, they get badly positioned in the chop zone when they could either clearly wait for a squeeze above key levels like the yearly open, which we're respecting and rejecting, or wait for a further breakdown for lower. And bias, of course, is for lower until the yearly open's broken, because it is a downtrend and we are going down, consolidating and going down. So what have we seen data-wise? Well, ETFs, they've been net selling, but yesterday we saw an inflow day. Now, of course, BlackRock do report a day late. A lot of people don't tell you that. So this was actually their flows from the day prior where they started buying. So keep an eye on that. Do we start to see inflows now creeping up? That's going to be interesting. Maybe they're starting to buy back from some of the selling that they've been doing. We know that selling has heavily catalyzed this downtrend. ETFs bidded up the market this cycle. So by the same nature, they're also able to market down quite aggressively. It's an institutional cycle for Bitcoin. There's different players now, different dynamics. We can't ignore the ETFs. The New York session is so important. It has all the volume, and it's really what's been moving Bitcoin. Very different from last cycle where you actually had Asia dominating, and Asia were dumping on the US at the top, or the US kept buying. So that's the dynamics. Of course, if we squeeze up, then I think the 50, 100 EMA on the H4 can be some areas to look for the squeeze to then finish at, especially if we just squeeze up straight from here without a proper capitulation. I think something like that would be very nice and would be what I'd look at in terms of a short position, squeezing into this 100 H4 EMA over here, because we've seen that get respected before on the bigger squeezes. Maybe it just comes up to this 50 and fails there. That's also very possible. So got to look at both scenarios there and assess it as the price action comes. If you see signs of rejecting, then I'd look for shorts on any squeeze. And again, the reason I say especially if we just move straight up from here, because there's no capitulation yet. There's not a proper bottom here if we just go up. A proper bottom looks like this, where you fail, you have a stab lower, then you reclaim, you base out, and then that sets a move for a rally much higher, because what is this? Again, it's failing to go lower. This is a wick which traps sellers at the lows, shorts at the lows, and those shorts are wrong once you start reclaiming, pushing up, reclaiming the yearly open, and then all of this is cause and effect. You built that accumulation for a long period of time that sets up your big effect. Energy gets released then because you built it up, and that allows the bigger squeezes. That's why I say this is going to sustain more of a squeeze rather than if we just went up like this, then it's more likely to mean revert just as quickly. So got to keep price behavior in mind as always. Can't just look at levels and say this is going to reject. It's also how did it get to that level. So I'll keep you guys updated in the Discord. All of my trading analysis is in there to see what we're looking at in the market. So that's Bitcoin, looking at the H4 on any shorts there. And of course, by that same nature, if we do then get that sweep and reclaim the yearly open, then especially in this example where you failed to go lower once, twice, and now start reclaiming levels, that's where I'm looking for longs to actually play the rest of that short squeeze. Whereas, again, if we just squeeze up, then I'm more inclined to just look for shorts and fade it and play that mean reversion back down. So that's what I'm looking at in terms of Bitcoin setups. H4 is the time frame for me. That's where we're seeing the respect on some of these EMA bands in the downtrend. And EMAs are your friend when you're in a trend. Simple as that, because they give you that trend resistance or trend support. So that's what I'll be looking at in terms of Bitcoin. Now, we have just had a bunch of economic data. So jobs data just released. What are we seeing? Well, we're seeing unemployment rate ticked up further than expected. However, NFP also ticked up further than expected. So more people employed, that means, than expected. But then this means more people unemployed than expected. So really a mixed data. Not much to infer from that. We've got a big wick up, now a big wick down pre-New York session, and we're now starting the New York session literally as I'm speaking. We wick down into this gap. I said in the Discord, low time frame shorts, you really do want to just take profit here because it's chopped between 90k and the yearly open. Simple for me. Below the yearly open, sellers are in control for a new leg lower. Below 90k, sorry, sellers are in control for a new leg lower. Above the yearly open, now we're in control for a potential squeeze. And between there, I'd just expect chop between these levels. Not too much interest in trades for me. Got to be quick in and out if you are scalping it because you've got these options levels. So Ibit came in 50 and 53. They're the big options levels that we are seeing, and that options expiry is on Friday. So we're getting close to it now. The more relevant it becomes. 50 and 52, 53 are the levels pinning us. So look back at the charts. 53, we lost that, mentioned yesterday. That led to a move down to 50, and we're now trying to rally up. So I'd expect price to probably ping pong between these levels, and that is confluence with the yearly open and around 88k. So you've got 88k over here, and you've got the yearly open over here, which is further reason why I think we just chop in between. If we try to get to the yearly open, likely rejects. Try to get to 90k, maybe that holds for a bounce, but it's really 88. That's the key level for Ibit to hold on the options. So that's why I think just chop until Friday and that options expiry is over. And then you can see the positions unleash after that expires. So would keep that front of mind. Now, if we look at the wider market, what are we seeing? Well, we are seeing gold bounced off the October FOMC level, still holding, rallying as I've been mentioning for weeks now, chopped between 4K and all-time high. That's what you've got to expect. NASDAQ bounced perfectly off my September FOMC level. Mentioned exactly this. Expect a rally. Now, is this going to fall short of the distribution zone over here? That's the question. Nvidia earnings came in and Nvidia actually reacted pretty well to the earnings. Bounced up, but within a high time frame bearish structure. So do stocks keep selling off is the question. September FOMC levels, your pivot below. Expect further unwind. We're bouncing from it now. So do we reject here or do we climb higher? October FOMC levels, the real level to reclaim, which is all-time high. And that will be interesting if stocks do keep rallying to all-time highs and crypto stays down. That's a big divergence. So keep an eye on that. Dollar reclaimed 100. So can we actually stay above 100 as we previously failed to do so? If so, that's going to trigger further risk off in the market. So that's what I'm looking at on Bitcoin. Yesterday, mentioned a setup, or if we sweep, reclaim, could set up a nice rally, and that's pretty much what we got. So I didn't take a trade around that because I didn't get the high volume, the big capitulation that I want to see, but you can see that offered a very nice setup off the Nvidia earnings there. Squeezed up after reclaiming 90K. That was the key level. And New York session, you saw a big Coinbase discount. So we know ETFs are selling heavily. But as soon as you reclaim 90K after the New York session, it's perfect time for a squeeze, right? Because those sellers are no longer present. That's when you want to do it with the Nvidia bullish earnings. That's why you got that move. So that played out. GM to anyone who took that trade. Guys, if you've been enjoying the content, please drop me a subscribe, drop me a like, drop me a comment, help me out. Let me push out this content to more traders, especially if you guys appreciate content from a real trader. Super appreciate all the support. Read every comment, every Telegram message I get. Love all you guys. Moving on to the data. What are we seeing? Well, this open interest level over here is where Bitcoin keeps reverting to. So when Bitcoin topped out at the yearly open, we have this key open interest level around 334K where when we fall back to that, the price seems to top out. We then rallied up last night, but that rejected over here and it rejected right where we falled back to that kind of level. So this seems to be where the futures market wants to be. You've got price, every time it hits this level, is topping out. So that corresponding level topped out here, corresponding level topped out here. So watching to see if we get back to that level. Does that mark some sort of top? Maybe back to the yearly open. That's another thing I'm looking at. Could be of interest. This is longs and shorts building, and that's what I'm watching. Spot CVD just continues lower, making a lower low. So we're getting a divergence here where spot are actually making new lows, selling at the market, whereas perps are holding this market up. So bias still is for lower, especially when you're seeing longs on the futures market and shorts getting squeezed is all that's producing these rallies. There's no real demand behind it. Of course, that can always go higher. Short squeezes can get violent, but if spot are controlling the selling, that's why you look for mean reversion back down on any rejections. And if you break down, sellers are in control already, so you just expect continuation lower. We need to form that final capitulation for a proper bottom so that spot buyers can return. Because right now, spot buyers, they don't want to bid here, but if we go lower, they're going to want to bid more. So spot are selling right now, perps are bidding the market up, short squeezes are bidding the market up, no real demand. So mean reversion, fade rallies, look for shorts to fill back in after that squeeze is over. And on the long side, wait for that final capitulation for low time frame longs and high time frame longs, because we're in a chop zone between 90K and yearly open. Squeeze risk above there, squeeze risk below there. And till then, we sit patiently so that we save our capital and maximize returns. So that is morning markets. Quick one today. Let me know if you liked it. I'll see you in tomorrow's video. GM.